Welcome to Markets Now. I'm Michelle Rook along with Allison Thompson with the Money Farm. We're seeing grains lower this morning with livestock futures kind of trying to gain some momentum to the plus side here as a result. And Allison, let's talk a little bit about the grain trade. First off, it looks like we're kind of removing weather premium from the markets.
Yeah, that's exactly it. It's definitely reminding us that we're in a futures market, so we're always looking ahead. And those longer term outlooks, the 1, 2 week forecasts are turning a bit better, better temperatures and better moisture chances. So the combination of the two is definitely weighing on the market. Just expectations that we should see some easement to at least the stress that they're experiencing this week. The big question is how much damage is going to be done. I know that we'll have crop conditions out on Monday, but the trade's already expecting those to be lower. So any surprises on Monday could definitely change things. Any forecast updates over the weekend could definitely change the look here early next week. But going into the weekend, I think, yes, we're just removing some weather premium out of the market.
Yeah, and you wonder how much weather premium we actually need to remove here because, there certainly is talk from producers, as you say, about, hey, my yields have been compromised already.
Yeah, absolutely. I think it's very spotty up here, and I know that extends all the way down into the Corn Belt too, of what guys are actually experiencing as well. And even on the rally early this week, I mean, it was tough for guys to even take advantage of that, make some sales because they really don't know what's out there yet, and they
Yeah.
probably are a couple weeks away from feeling a little bit more confident about that. And if we could get rain in the next week up here, northern Minnesota, North Dakota, we don't have a whole lot of chances of rain here in the next 10 days, and we are looking at upper 80s for temperatures, which is fairly warm for us. And after seeing upper 90s here this week, it definitely has took a turn on some conditions, but again, it's very spotty. So how it all comes through in the end will definitely keep us guessing here for at least a couple more weeks. Corn definitely sees a better picture fundamentally, so it does look better from that standpoint. Soybeans, on the other hand, we just can't afford any production loss. So downside has to be limited at some point. But I know on a technical standpoint, we have been overbought. So seeing some type of a correction isn't bad. And if this is going to be a bull market, we have to see those reprieves too. So just make sure you're taking advantages of rallies when they come and at least protecting something in some way, whether that be on the board or with some cash sales when they do come.
Yeah, absolutely. Don't let this opportunity get away here. It's a little surprising to see beans even down here, Ellison, with all of these flash sales that we've had on soybeans, even this morning. Big
Yeah,
sale.
phenomenal. We've had phenomenal sales this week, ending up with a pretty good total all said and done, and seeing good amounts even this morning with several destinations, China, Mexico, and unknown. This week we've kind of been seeing a lot of unknown, but to actually see one with China's name on it definitely tells us something too. There are definitely buyers that are a little bit more cautious on putting their name on something. So maybe there is some kind of development there. Maybe their economy is getting better, or they see the need to start booking some sales now. So it's definitely worth watching. But again, we are in the time period where we should start seeing some more export business. So it's good to see that we're finally getting it. But the question is how much we're actually doing compared to normal. And I think that's maybe catching on the trade a little bit here too. We just need to make sure we're seeing it continue going forward.
No, I agree with you. With 65.5 million bushels so far this week, certainly that's a good total, but we may be behind on those new crop sales so far. What about old crop? Okay, so August and September, I think, made new contract highs yesterday and then reversed lower. I know a lot of guys don't have a lot of old crop soybeans even around, but is that indicating anything in this market about demand or anything else, or was it just funds taking profits or what?
Yeah, well, it's definitely an interesting move. I know for much of the Midwest, a lot of elevators, end users are bidding off the November contract already. So
Right.
I have a hard time believing that that's necessarily the case. I have a feeling it's probably just some big boys moving that market around. And we do go into first notice day on Monday for the August contracts. So there might be some movement here in the days ahead after making that. I'm sure there's going to be some rolling happen. So I'm feeling it's probably more of that necessarily than necessarily demand indicated. But as August goes off the board, it'll be interesting to see what that September contract does, since it is trading at a very good inverse at this point. So if there is going to be some demand, we should start seeing it pick up in that September or November contract. November has obviously a little bit more volume, so it'll be interesting to watch here going forward if that catches some more contract.
Yeah. And just, crush margins have been good. So that's understandable that there would still be some demand there for old crop soybeans. Also, let's talk about the wheat market, because yesterday Minneapolis wheat was kind of off on its own, trading higher. And some of that has been a result of this crop size, maybe we're thinking that this weather's actually continuing to hurt the spring wheat crop. What are you hearing?
Yeah, well, I'm in the heart of spring wheat country, so we've been paying close attention to that market for sure, and it's really good to see it finally actually trade its own fundamentals. Normally, that doesn't happen. We've seen that struggle in KC wheat, so to see Minneapolis start to trade some of those on its own is definitely good, and definitely tells us there are some issues out there. From a standpoint, working with a lot of clients, conditions definitely vary. There is a lot of concern, though, of seeing a really decent reduction on yield, though, this year. Stands are poor, thin. Again, the heat pushed that crop along quite a bit. For the most part, I think guys are still, a week or two away from harvest. So we'll probably see some harvest pressure work into the market in the weeks ahead. And that'll probably give us a better idea of what's actually out there. Wheat's really hard to gauge. I know everyone's kind of looking at that spring wheat tour going on this week, but in reality, when it comes into harvest, I mean, that's where the truth is. The last few years, we've kind of been talking some of the same things where we're concerned about production up here. And sometimes we're pleasantly surprised with the way the crop ended up. So it's still kind of a toss-up, I think, and that's probably why it's been limited here on this rally as far as making new highs quite yet. But again, there are a lot of concerns, and it's not just here. I mean, it goes all the way to South Dakota and all the way up into Canada. So we're talking about a large area that's seeing some poor, less than ideal conditions at this point for the crop. So I do think production is going to definitely be impacted when you put it all together.
Yeah, you mentioned the spring wheat tour and 47.4 bushel per acre average for yield on the whole tour, which is pretty close to USDA, but it is down about 1.5 bushels from last year. When you look at this year's crop versus last year, do you think it is smaller than last year?
Yeah, I would agree with that. I would agree with that statement, especially when that tour was based on North Dakota. They can't deal with drought on drought conditions for very long. It's going to affect production, and especially we saw that even with yesterday when they were in the central part of the state. There too, it's just going to affect things. So we have to be looking for timely rains during the summer for those areas, and without it, they are going to suffer. And the Canadian prairies are the same way. So yeah, I think that we are going to see a lower production number when it's all said and done.
You bet. And despite that, we've got wheat markets down this morning. Kind of the void of Ukraine, Black Sea war news is kind of part of the reason, isn't it?
Yeah, I mean, we had really good headlines going to start the week. And I think everyone just thought that we would start seeing this war intensify and start seeing some daily attacks or things like that. And it's really been lacking this week. So, yeah, we have pulled back since those highs. I think the market's just trying to figure out what this new level of war or this new wave is and what that means here going forward. Obviously, the talk this week is that those exports are going to continue to some extent. No one knows what the price is going to do because of that, but for the most part, it seems like they're going to try and find some other routes for Ukraine's grain. But again, we're going into a weekend here too. We'll have 2 days. Who knows what Russia has us up its sleeve at this point, but that could definitely change things come early next week. So obviously a lot of moving parts. We just have to try and stay on top of it. And headlines have been all over the place, kind of contradicting some of the earlier statements as well. So it's just trying to decipher what it is. But obviously the market has been a little bit more cautious on trading some of those headlines as well. So I have a feeling we're just going to see some choppy and volatile trade in wheat for a while.
Yeah, it has been volatile, that's for sure, because the market didn't have much war premium in. And I think the funds got kind of caught short, at least in Chicago, didn't they? Leaning the wrong way?
Yes, I believe they did. So yeah, it doesn't surprise me to see that. Will be interesting to see their commitment of traders report this afternoon.
Absolutely. Okay, so livestock futures are to the plus side here. The pullback in corn and the feed grain and the soybean meal sector certainly helping out those markets, it looks like this morning.
Yes, absolutely. And outside markets too have rebounded. Yesterday, they kind of turned lower towards the end of the day, but as long as those keep going too, it should be supportive. We just are lacking a lot of fresh news in cattle. So, but they are following a lot of those outside markets and obviously grains as well for direction at this point.
Yeah, we don't have much cattle trade at all here to talk about so far this week. The feedlots have really dug in their heels. Looks like they might have the leverage.
They might, especially when we're talking about the heat as well, hitting through some of those areas as well. It'll be interesting when we do finally see some cash trade, what that does to our futures market.
Yeah, I'm glad you brought that up because I have felt like should have been putting a little more weather premium into the cattle market this week, and it doesn't feel like we have been. So,
No, maybe we'll start.
okay. Thanks so much for joining us, Allison Thompson with the Money Farm. That's Markets Now.